senior trader with daily fundamental analysis. Today is March 15, and let's take a look at what is happening around the major currencies. The beginning is Euro-USD pair, and it is trading at 1.2936, losing a bit of momentum, as the focus is on the summit, today's finance minister meeting, a short break in negotiations surrounding the next bailout installment for Greece, and an unexpectedly strong auction of Spanish government debt. So the Euro Union leaders meeting is expected to produce a relaxation in financial targets by focusing on structural balance. And on Wednesday, Euro broke the previous 2013 low at 1.2955, even lower than 1.30, and has continued to decline towards even 1.29 sharp. So industrial production in the euro area registered bigger than expected drop, while United States retail sales rose at the fastest pace in 5 months. So euro is weakening, and the United States dollar is growing up as for a week, even more. Well, manufacturing output in the eurozone declined by 0.4% month to month in January, compared with forecast with 0.1% month to month, and following the upwardly revised 0.9% in month to month increase in December. In contrast to the disappointing euro area data, United States retail sales beat the consensus forecast for 0.5% month to month increase, rising by even twice, 1.1% month to month in February. The dollar attract more bids on signs that the recovery in the world's largest economy is gaining traction. Uncertainty about the future of Italy could add more pressure on the single currency as in the days ahead. So pay attention to it too, counting your bids. So back to the Great Britain. Pound and United States dollar is trading at 1.4944, remaining weak but gaining slightly. Strategists say that pound recovery from Tuesday's through of 1.4832, yes, its lowest level since June 2010, was unsurprising given the extent of its 8% slide against the dollar so far this year. Investors who had sold sterling at higher levels were using the opportunity to take profit on those positions, and particularly given a lack of United Kingdom data for the rest of this week. A credit rating downgrade last month, failing to support the government austerity policies and speculations. The Bank of England may opt for more monetary easing to stimulate growth. Are the other factors clouding the outlook for the pound? So strange, but that's fact. Analysts say many markets players would also be aware of taking large position before Finance Minister George Osborne presents the UK budget on March 20th. And speculations on mounting that Osborne will announce a review of the Bank of England's remit and gave it more leeway on inflation targeting, allowing scope for further easing of monetary policy. Back to Japanese yen. This pair, United States dollar Japanese yen, is trading at 95.88, dipping 24 pips. The voting has started to name the new Bank of Japan chief. Japanese yen is outperforming, up 0.4% from yesterday's close and rallying for the second consecutive session. Despite opposition from some parties, all three nominees are expected to be confirmed by the Diet. The trio will take office March 20th, the day after the current leadership team led by Governor Masaki Shirakawa, leads. The 13% decline in the yen against the won since the start of December has prompted Japanese tourists, who account for the biggest portion of foreigners traveling to South Korea, to cut spending. The Japanese currency is forecast to weaken to 102 to the dollar in 2015 from an estimated 94 in the second quarter of this year, according to the median of economist estimates completed by Bloomberg. The dollar received some underpinnings from buying on dips, purchases from importers, and expectations of both monetary easing steps under the new Bank of Japan leadership, traders said. And for the end, let's take a look at gold. Gold tumbled today to give back the week's gains. But I have to mention that in generally base metals and crude oil were seen inching up. Gold ticked lower from its 2-week high during the previous session, trading below 1,590. And once, as upbeat data from the United States took the sheen of the yellow metal. The strong United States dollar index that scored another fresh 7.5-month high overnight continues to limit buying interest not only in gold and silver but in many other commodity markets too. The overall near-term technical postures for gold and silver continue to favor the bearish camp, so going down. Yesterday's fundamental data helped ease gold and supported the United States dollar, with unemployment claims beating forecast and the United States current account printing better than expectations and PPI meeting forecasts. Markets eased and traders went on the hunt for riskier assets, leaving gold to tumble. Traders are preparing for the next week's FOMC meeting, and this time they are not sure what to expect from Mr. Bernanke. With the data printing as strong as it has, there is an increasing likelihood what is Fed will cut or end even their stimulus program. Many traders are moving to the sidelines as the week closes. Well, about the next week on Monday, we'll see the forecast, and we'll talk about all majors and gold again on Monday day. So for now and for today, that's all. More details you still can find on our site, www.grandcapital.net. And for now, have a nice and profitable day and a good weekend. Bye.